Bazaar Morning Call, live from the CNBC TV 18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, and joining me from their respective homes, Surabhi and Anuj. Well, we have a roaring rally on Wall Street. All three indices shooting up between 1.5% and 2.5%. Asia started lower, but it's crawling up, cutting its losses for sure. What do we have at home? Well, the numbers that came, the advanced numbers that came from Bajaj Finance and Bandhan Bank clearly show an alleviation of pain. I mean, lower moratorium calls, in fact, those that asked for moratorium, looks like are paying back. The bigger positive came from actually Godrej Consumer. That stock's volume growth, the company had done a negative contraction of volume in the previous quarter, and even in prior quarters they had done just about 1-2%. The company says they've done mid-single digits in terms of volume growth. Now that's a positive. So of course there is one negative. Maybe there's another lockdown in Aurangabad, and that's affecting the Bajaj Auto and the Skoda plants, which are located in that area. So there is 2 steps forwards and 1 step backward, but the narrative from the markets appears to be that we are learning to live with COVID and still progress on economic activity. With each passing day, the relaxations are higher. That, coupled with liquidity, is continuing to keep the markets hydrated. It's what I think every day of July we have climbed, almost every day, and therefore there could be a question of whether we are running too much too soon. Liquidity always does that. So those questions are there, but the positive in the macro narrative is that we seem to be coming to terms with COVID and still manage a little bit of growth, a little bit of activity. Maybe that's the positive markets are latching onto. I want to leave you with one more event. KV Kamath completes his term at the new development bank, at BRICS Bank. It was originally called BRICS Bank. He completed it yesterday. He's back in India, and he will be speaking with CNBC TV 18. I'm just leaving that on the table. KV Kamath is back. Well, to you, Anuj, too much of a good thing for the markets, or do you think it will climb the wall of worries?
Good morning, Lata. Well, I thought I'll wear a red tie today just for the last, perhaps the last hour. No jokes aside, that this market is strong. It's making, if you're a bear, the market's just making a meat of you. And just to add one more thing, by the way, couple of states like Delhi and some other states are beginning to flatten the curve of COVID, which I think is also good news. Obviously from market point of view, but from more from larger country point of view. I think I take your point. All 3 numbers: Bajaj Finance, Bandhan Bank, and Godrej Consumer. I think Godrej for me really is the one which stands out, because this is the hardcore consumption, and this was supposed to be the washout quarter, and on a decent base to deliver growth, single-digit volume growth, is something. And it's just telling you the resilience that is there in a country like India. I think for me that's the bigger point. Now stocks have rallied. Bandhan Bank and Bajaj Finance have already rallied so much. Bajaj is up 75%. Bandhan, I think, has more than or almost doubled from the lows. So the jury is out on how much of this is priced in. But perhaps Q1 was not as bad as the street was fearing. And was that the reason that the market was rallying all this while? So the market is always 1 step ahead of analysts and 1 step ahead of us, or 2 steps ahead of us. And that's what the market's done. So how much of this did the market know already when it had that move from 8,800 all the way up to 10,700 thereabout? Now, a couple of data points. Normally, the first attempt at the 200-day moving average gets rejected, both on the way down and on the way up. We are making a move towards the 200-day moving average, just slightly falling 200-day moving average on the way up. So we are at 10,700 thereabout, 760. The 200-day moving average is 10,890 thereabout, another 100 points. And the market factored in this big global rally. By the way, Argentinian market was up 9% yesterday. So a lot of markets are in a hurry to get back to their highs. The bank Nifty, that faces congestion at 22,200 to 22,300. The template is buy on dips. I think the market will give you some dip at some point, and you'll have to wait for that now. If you've missed out, you'll have to perhaps wait for that one dip which the market gives you. There's been buying in cash market, there's buying in futures. FIs have in fact bought index futures, stock futures, index call. They've sold puts. I think that's just too much of good news now in the market, and because we are so close to 200-day moving average, I think if you are an existing long, you just have to ride and trail stop. But if you are entering now, that's a big leap of faith. If you take it with the knowledge that the market at this point can easily fall 300-400 points without disturbing its longer term or its trend of uptrend. That's the call that one needs to take, which is a bit of an uncomfortable call right now. Surabhi, good morning.
Good morning, Anuj. Good morning, Lata. Yes, I mean, data has been absolutely dazzling, right? When you look at the charge of the light brigade, as I'd like to call it, when it comes to the bull movement. Just, of course, yesterday's numbers first up. Yesterday, we had another positive cash figure in the market, about 350 crores, not very big buying, but anyway, we were net positive, second day in a row. So that was some takeaway. And then, Anuj, I simply started going back and looking at markets around, because we've been discussing this, that do we ask how far away are we from all-time high? So, well, if we just look at July, the rally across the world has been breathtaking. Actually, it's the Shanghai market, and which is, by the way, at all-time highs in any case, and the Hong Kong markets, despite geopolitics, despite Corona, 12%, 14%, these are the kind of moves that we've got. MSCI emerging market is up 5.6%, Brazil 4%, Kospi 3.5%, and even the big markets, the developed ones like the DAX, CAC, Dow itself, between 2 and 4%, and the Nifty is up 4.5%. So of course we're in sync with what's perhaps going on. And then the distance from the all-time highs. So this is interesting now, right? Nasdaq, we already know it scaled that peak. Dow is about 11% off. Nifty is around 13% off. The Bank Nifty, and Anuj, this brings me to the question, the Bank Nifty is still well off the peak, right? So I don't know if someone has been sitting out, feeling very bad, having missed this entire run, then is it just too late? Do you wait, let the dip come, then buy? Or do you still look at maybe a different index like the Bank Nifty, which hasn't run as hard back to the previous levels?
Surabhi, there are two kinds of approaches in this market. If you are one of those who believes that this market is not going to give me any dip, then you just simply buy and put a stop loss, perhaps previous day's low as stop loss, and take that leap of faith that I mentioned. That the market perhaps still has some distance to go. Either you do that, but you do that with well-defined stop loss, and you do it via the options market. Or, as I said, if you see the market for whatever reasons, in between it has given you dips, and in between it's given you consolidation, buying opportunities. Remember, even yesterday, if you chase the gap up, even in something like an HDFC Bank, you actually lost money. Yesterday, if you chased the Bank Nifty after the gap up, or you didn't make too much money. So you either wait for a bit of a pullback, or if you enter with the knowledge that I need to try my luck here. If it works, it works. Otherwise, I'm out of the market. I think that's the call that one needs to take if you're entering fresh right now.
Yes, on the Nifty Bank, you will have to look at price to book, and the book is extremely difficult to gauge. Maybe you will perhaps have more faith in the book of HDFC Bank and a Kotak Bank, given how seasoned they are. But somewhere the economy's pain has to fall. I mean, the economy is working way, way, way below capacity. So somewhere the pain has to come. And therefore, I'm not at all surprised that the Nifty Bank is trading where it is. If you looked at the other banking stocks, they would be trading even much lower. I mean, in terms of distance from the top. So it'll require a lot of courage to convince yourself. It's better to go stock specific, I guess, in banks rather than the Nifty Bank. But let's wait and see what's the market's verdict. Now we come to equity advice today. This one comes from Sayon Mukherjee of Nomura. Sayon Mukherjee says that after the recent rally, the Nifty is trading at 19.8 times one-year forward earnings, FY21 earnings, the highest in the past decade. Market is clearly looking beyond FY21 earnings, and on a two-year forward basis, the market is at 15.6 times, again above the long-term average of 14.4 times. With continued increase in COVID-19 cases and slower economic growth, they remain very selective. Nomura prefers exporters, rural consumption, and companies that are likely to gain market share through the crisis. Nomura stock picks Reliance Industries, Lupin, HCL Tech, M&M, and ICICI Bank.
Okay, that's an interesting call from Nomura. Let's move to the money market action, and we have a view coming in from Bhaskar Panda of HDFC Bank this morning. He says that the rupee has comprehensively broken below 75 and has been trading below that for the past 2 sessions on the basis of good inflows. The USD INR pair is likely to trade in a range of 74.50. Actually, that's the pivot point, he says, in an intraday range between 74.45 to 74.70.
You know, Surabhi, this is also in range. There has been a roaring rally on the yuan also. Basically, the dollar is weak. All right, let's come to the Indian bond space. Bhaskar Panda says benchmark bond yields have remained resilient around current levels and we are yet to see any signs of a breakout. He's expecting the 10-year benchmark bond yield to trade within 5.8 to 5.85 range today.